And what is that going to force? It's going to force eventually the Fed's final pivot, just like the UK, the Bank of England, is doing right now. And when the Fed does it, the dollar is going to die. Well, hello there, my friends. Rafi here from the Endgame Investor with this week's silver report for Arcadia Economics. I got new shirts. Everything's cool now. And boy, things just keep getting more interesting and crazy. Let's start with the Bank of England, the central wankers in the United Kingdom. They have begun the final wave of central bank pivots. And have chosen to destroy the pound by printing 65 billion pounds to save a collapsing bond market. And they say it's only going to be 13 days, 2 weeks to flatten the yield curve. It's going to work. Just like everything when they say 2 weeks to flatten the curve works. It always works. Stop questioning science. Anyway, we'll start with them. We'll go to silver. We'll talk about why I do not believe that we are starting a precious metals bear market. This is just end game tremors. Things are going to get wild. They're going to get unstable. You got to hold on, because by the end of the day, when the pyramid collapses, the only thing left will be gold and silver, and they will have the ultimate purchasing power, and everything will fall in precious metals terms, silver primarily as the public's money. And so let's begin with the central wankers in the Bank of England. This silver report is brought to you by Fortuna Silver Mines, symbol FSM. I want to go into something a little bit obscure here. The ratio of Fortuna to silver, or silver to Fortuna, the higher this ratio goes, the cheaper the stock is in terms of silver. You can see here is the March 2020 COVID crash. The high is at about 9.79, exactly 9.79, March 9th, 2020. And here, the high is 9.28. So we're almost at the March 2020 lockdown lows in this stock in silver terms. I don't think these lows are going to be broken. Remember, the higher this chart goes, the lower the stock is in silver terms. Fortuna is still profitable even at these prices. And so this stock looks really cheap, at least in terms of the commodity, of the money that it mines out of the ground. The chances of getting a better price on this in silver terms, I believe, is pretty low. And disclosure, I do own FSM myself. This is from the FT, the Financial Times, this chart, and it shows the daily movement in long-term gilt swings. Gilt is the British name for bonds. Every country has its name. The US has treasuries, the Germans have bunds, the British have gilts, and I don't know, there's other ones. So anyway, long-term gilt swings in yield you have here in the rectangle. The 2008 Great Financial Crisis, yeah, that was quite a swing. And up at that point, I think it was historic. And then here you have when the world was placed under house arrest for rational, logical reasons that we all agree with, and let's not get censored. And yeah, and that was a crazy swing in the gilt market, in the bond market, and bond markets all over the world. However, this is what I call Kol Dodi Dofek, and that's a verse from the Song of Songs of Solomon, the voice of my beloved knocketh. It's the end game that's knocking on the door of the United Kingdom and the Great British Pound. This is unprecedented. This bond swing shows fundamental problems, crisis proportions in the UK bond market. And I said at the beginning of this crisis in 2020, 2 years ago, even before I started the Endgame Investor, that the British pound was probably going to be the first currency to collapse. Why? Because the Bank of England was the first central bank to directly finance COVID spending. That means no intermediary in the quantitative easing process. Bonds were bought directly by the central bank, and that is what yields hyperinflation in the fastest way. But anyway, let's go to the physical markets. We'll begin with gold. You can see here that the gold American Buffalo premiums have spiked again as of, I think it was 2 or 3 days ago, from 7.3% to about 8.57%. This is an all-time record, excluding the 2008 financial crisis, which was about 9.7%, but we have surpassed the March 2020 crisis highs in physical premiums for gold buffaloes. And for gold eagles, we are at a new record, just under 9%, surpassing the 2008 financial crisis, surpassing the March 2020 lockdowns. And let's go to junk silver. We are just under 40% premiums. The all-time record is 40%. We are right there. We are not moving anywhere. Physical demand has not abated. It just keeps climbing. And I wanted to say a word about the money supply. This is a special measure that I've used for many years from my teacher, the late and great Robert Wenzel, who takes the quarterly average money supply and compares it to the quarterly average money supply from a quarter earlier, and then multiplies it by 4, and then you have an annualized quarterly rate of monetary growth. This is the actual rate of inflation, by which I mean monetary inflation, the money supply. I'm not talking about consumer prices, I'm talking about the money supply, which is deflating for 11 straight weeks now, which is actually 14 straight weeks, because this is on a 3-week lag and we are still deflating. So we have 14 weeks of absolute deflation, meaning this line, this blue line, is below zero, which means the money supply is shrinking on a quarterly annualized basis. The last time this happened was right here in 2008 for one single week, and it led to a bloodbath of historic proportions. And yes, I've mentioned this deflation right here. That was at 2009, after the deflation in stock prices have already happened. So this absolute deflation didn't really affect stock prices much because they had already crashed. Here, we are at a stronger deflation, more consistent 14 weeks of absolute deflation, the strongest in history, going back to 1980 when the Fed started making records of the money supply. Here's the raw data. The rate of quarterly annualized absolute deflation began on June 27th. It peaked on July 25th at negative 2.64% quarterly annualized, and now we are just under 2%. So we're still deflating very strongly. And you can see here on the right side, this is the absolute money supply going back to 2012. You can see this is post-2008 era. It's pretty smooth, and there are not many big anomalies. There are these bumps around tax season that go back down. That happens every year. Then you have the COVID era here, spike, where money supply went from, 14 trillion to like 17 trillion in 2 weeks or something. Whatever the crazy numbers, it doesn't even matter. But here you see this is December 2021, I believe, and where my arrow is massaging the underbelly of that little line there. And we're still basically at that same number. It's something like 21 something trillion. We are at a static money supply, falling very gently, which historically is very strong because we never fall in an absolute sense, but we are now. This is going to lead to an enormous financial crisis of biblical proportions at some point very soon, I believe by October, November at the latest, because that's when these things generally hit the fan. And what is that going to force? It's going to force eventually the Fed's final pivot, just like the UK, the Bank of England, is doing right now. And when the Fed does it, the dollar is going to die. Let's return to the COMEX. The COMEX keeps draining, at least of registered silver supplies. We are down to 42.69 million ounces from a high of about 155, 153 million, whatever it was. So we've drained about 110 million ounces of registered silver supplies in the COMEX. And there's a little bit of an argument in the silver community. Does this really matter? Does it not matter? And I can't tell you definitively. But the other side says that what is more important is the unallocated silver accounts, like in the Perth Mint and in Switzerland. I personally, they might be right, but I don't believe he must be right, because why should the unallocated accounts panic before the COMEX does? Shouldn't it all come at the same time? If silver is silver is silver, and it is, it should all come at the same time. So this is really a proxy of the physical states of the centralized paper silver markets, and it doesn't look good for them. At this rate, we will be at all-time lows in registered supplies in about 2 months, and this rate has not slowed down, and arguably it has actually picked up since silver squeeze. And now there are rumblings, uncomfortable thoughts in the gold and silver community among the silverbacks and the gold bugs. Is this another gold and silver bear market beginning like we saw from 2011 to 2015? I'm going to show you 3 reasons why I do not think so. And the fundamental reasons aside, I think you all know what those are, that we were very close to the end game. So no, this is not another bear market. However, I'm going to show you 3 key differences between 2011 and now. The first one is in the gold price. You see here, this is the April 2013 collapse. Yet here, this horizontal line is the triple bottom. 1 here, 2 here, 3 here, maybe 4, you could count it, whatever you want to count it as. And here is the final break of that bottom. There was a waterfall decline from about 1550 to like 12 something or whatever it was. It was humongous. And here you have a capitulation volume of 60 million contracts, or whatever the number is. It's not 60 million. It's well, I guess maybe it is. I don't know. It's very, very high, whatever the hell it is. It's a capitulation volume. So that was the last of the gold bugs bowing out and admitting that they lost, and the bear market really began that day. It lasted for another about 2.5 years from that point. Now, this time, you have the same break of that triple bottom or quadruple bottom. Very, very similar pattern here. 1 touch, 2 touch, 3 touch, 4 touch, quadruple. Then you have a break. And you have also a break of the 200-week moving average here in gold. So you would expect a capitulation volume when all the algorithms sell at the same time, but you do not see that. Not in the gold market this time. There is no capitulation volume here. That means there probably isn't anyone else to capitulate. So who's selling? Well, banks that need liquidity because we're in a dollar squeeze. Look at the dollar index. It's going crazy. As all other currencies collapse, you need dollar liquidity to pay back your debts. And this is a temporary situation until the Fed pivots for the last time. The next point I want to make is that silver is leading gold. This is the gold to silver ratio. The higher it goes, the worse silver is performing. That topped at the end of August here at around 98, and we are down now to 88. So silver is outperforming gold even as gold makes new lows. That doesn't tend to happen in a bear market for precious metals. Silver tends to lead gold down. It is not happening this time. Silver appears to have bottomed. We'll see if that holds up. Nothing is guaranteed, but it is not the same as 2011, at least not by these technical measures. Last time, this is the April 2013 gold crash. This is the gold to silver ratio, and silver kept leading gold down. You see the gold to silver ratio heading higher and higher, which means that silver was performing worse and worse and worse. From April through July, that was a signal that we were in a precious metals bear market back then, but not now. It's not being replicated. And finally, gold in terms of the S&P 500. It doesn't look like it because the dollar has been so strong on the Forex markets. However, gold has been outperforming stocks since the end of 2021. All 2022, this ratio has been heading higher. Gold in stock terms is headed higher. Stocks have been underperforming. This does not tend to happen in a gold bear market or a silver bear market. And so that is the message I wanted to share today with the silver markets and the Bank of England making its pivot. We have to just wait for the Fed to be forced to make its final pivot. And when it does, the dollar is going to be dumped in favor of the precious metals, in favor of gold by central banks trying to protect what remains of their currencies, and silver for the public trying to protect what remains of their purchasing power. But I fear that once the public all runs to silver, there won't be much to run to. So get it now before the panic starts. I know the premiums are high, but they're going to go higher because it seems to me that the process of the end game has started, and it will quicken when the Fed finally turns. This is Rafi, the Endgame Investor. If you enjoyed this video, subscribe to my YouTube channel at Rafi Farber. Follow me on Twitter at Rafi Farber. You see the little thing in the back there. This is a mirror thing, so I always get confused. Or you can sign up on Patreon to be my patron and get interesting biblical commentary on topics like Jubilee and sabbaticals and gold and silver in the Bible and monetary policy and economic topics and government. Or you can sign up for a 2-week free trial of the Endgame Investor. Link in the description below. Have a good week. I'll see you next week. It's going to be fun, I'm sure, because things are not going to calm down from here.